Welcome back, dear learners. Before the ad break, we did some exciting activities. But again, I have more activities here with me. And it reads, an extract from the pre-adjustment trial balance on 28 February. We have the balance sheet account section where we have a fixed deposit, 80,000. Remember, a fixed deposit is an investment. And we have, in the nominal account section, interest on the fixed deposit, 9,600. Then it reads, on the adjustments, 80,000 of the fixed deposit was invested for 1 year at 16% per annum. Provide for outstanding interest for the last quarter. So we want to know how much interest is outstanding. There are several ways in which you can calculate this amount that is outstanding. However, I'm going to show you one simple way that can show us the interest that is outstanding. The fixed deposit is for 80,000 and the interest rate is 16%, which is 16 over 100. And we are being told that this fixed deposit was there for 1 year, that is 12 months, multiplied by 12 over 12. If you punch this in your calculator, you are saying 80,000 multiplied by 16%, multiplied by 12 over 12. It should give in your calculator 12,800. This is the interest that we are supposed to receive for the entire year, the interest that we're supposed to receive for the entire year. However, we have received interest of 9,600. That means of the 12,800 that we are supposed to receive, we have received only 9,600. That means there is interest that is accrued. That is now the interest for the last quarter. How do we get that amount? You say 12,800, that is what we must receive, minus what we have now received, which is 9,600. That gives you the difference of 3,200. This is interest that we must receive, that we have not yet received. Therefore, we call it accrued income. Accrued income. When we come to the general journal, you have to remember that we debit accrued income. So I'll come here and I'm debiting my accrued income. And the amount thereof is 3,200. The amount for the last quarter that we have not yet received. And I would then credit interest on investment. Interest on investment. And the interest on investment that is accrued is the 3,200. Once you have completed your general journal, it therefore becomes easy for you to complete your general ledger. In the general ledger, the interest on investment, it is an income account, so it will increase on the credit side. So we have the total from the trial balance, which was 9,600. You remember that one? The one for the other quarters that we've already received. However, we have interest for the last quarter that was not received, so that is accrued income. And we come to our interest on investment, then we credit it with 3,200, as you see here. Therefore, it means we debit our accrued income with 3,200 over here. When we come to the profit and loss, first we have to close our interest on investment account. So we need the total here. So we're going to add 9.6 and 3.2. That will give you 12,800. I'll therefore come to my debit side, then I'll say profit and loss. I'm closing it off to the profit and loss. And on the profit and loss, you now say 12,800. You then, remember, we're closing it off to our profit and loss account. That means the same 12.8 is what we then find in our profit and loss as 12,800 over here. Very important that in your interest on investment account, you must add these two amounts, that is your 9.6 into 3.2 to get the 12.8, which you then bring to the debit side and then you close it off to your profit and loss. The full amount now, 12.8. Remember, this now becomes interest for 12 months. We have adjusted in this case. Let us now see when it is properly done. There it is. I want us to move on to the accounting equation. When you do the accounting equation, remember that this is accrued income. So you debit in the accounting equation, you debit your accrued income. You debit your accrued income. And once you debit accrued income, remember we consider it to be an asset. So I come to my assets, it's plus 3,200. And we credit interest on investment. So that means I'll come to my credit side, then I have my interest on investment. Interest on investment. And that means I will come to my owner's equity, and my owner's equity will increase with 3.2. It will not affect my liabilities, therefore it becomes 0. Dear learners, after you have done this, this is how you can do the accounting equation when getting information from the general journal. I want us to look at the next activity, so I'm just going to quickly move on to the next activity. Let's go on to the next activity. The information reads, extract from the pre-adjustment trial balance. We have the balance sheet account section, then we have a loan. Remember, a loan is a liability. A loan is a liability. And it is 100,000. Then the interest on the loan is 16,500. Then it reads on the adjustment. The business received the loan at the beginning of the financial year. That means we have had the loan for 12 months. Interest on the loan for February has not yet been paid. So we're owing interest for 1 month. Interest is charged at 18% per annum. Again, I want us to do it in the way that I did it earlier on. Here they're telling us that interest for February has not yet been paid. I want us to see how much we should have paid. Therefore, I'm going to take the loan, which is 100,000. The interest is at 18%, 18 over 100. For the entire year, we should have paid interest of 18,000. If you punch that, it gives you 18,000. You say the loan multiplied by the rate, multiplied by the time. It gives you the interest that we should have paid for this year, 18,000. However, of that 18,000, we have paid only 16,500. And we're told interest for February has not yet been paid. That means we're owing interest for 1 month, which is 1,500. This becomes now my accrued expense. I have interest that is owing for 1 month. The moment I have interest owing, I'll come then to my general journal and I'll debit interest on loan. I'll say interest on loan. And my interest on loan is 1,500. And then I'll credit my accrued expense. And I'll say here accrued expense is credited 1,500. There. When you are doing now the general ledger, it becomes very easy. Let's start with the interest on loan. Remember, we have total, so interest on loan is an expense, hence it increases on the debit side. This is an expense account. So I have the total, the one for 11 months. Remember, it was 16,500. But we then debited interest on loan with 1.5. So I'll come here, then I'll say accrued expense, 1,500. And then we will credit our accrued expense with 1,500. There it is, 1.5. I will, however, then close this account. If I add this, it will give me that 18,000. Remember the one that I was talking about. Therefore, I'll close this account to the profit and loss with 18,000. When I come to my profit and loss, I'll then debit that profit and loss account with 18,000, like that. And when you have the 18,000, this is how you complete the general ledger. Let us move on now to the accounting equation. In the accounting equation, it is very important for you to remember what you'd have done in the general journal. In this case, we debited our interest on loan. So that means I'll come here and I'm going to debit interest on loan. And remember, interest on loan is an expense. That means my honest equity is decreasing, say minus 1.5. And then we credit accrued expense. And then accrued expense is a liability. That means my liabilities are increasing, plus 1.5. Therefore, the accounting equation will balance. On our assets, however, there is no effect, so we will have 0. Dear learners, let's go for an ad break, and I'll see you shortly.